Fire is a philosophy of life. If you say that fire is wrong, I'm not going to disagree with you. In many aspects, you might even be right. Fire has to compete with lying flat, with conventional retirement. Some people, when they practice fire, and it goes back to our definition of what a good life is, right? The first is happiness. Are you feeling happy about yourself? It's joy. Actually, more money leads to happiness, higher pay, higher wealth. And that's like 60% of what they look for. Fire does help in that. Because you generate a lot of money and it generates a lot of dividends, then R is greater than G, you will always have more money over your lifetime compared to someone who don't. So I've solved 60% of the puzzle. Now, what I can't solve is the other 40% because 30% is meaning. The final 10% is psychological richness as to whether fire makes life meaningful or meaningless. If somehow you cannot imagine fire making your life more meaningful, your life more richer in terms of your emotions, then you don't have openness to new experience. It's not the fault of fire.
What is your read of the FIRE movement today? Welcome to Chills with TFC. I'm your host, Reggie, aka your Chief Financial Coconut, and we are back in studio with another cool guy. And honestly, there are only that few left. I have went down the Rolodex of all the people that I find cool, and today we're in studio with Chris, one of the earliest people around this FIRE movement, and I know he has a lot of thoughts around this, and he has achieved a good sized portfolio. At least I found out through Budget Babes channel. So we will go through all that good stuff, and for our audience that don't know you, can you introduce yourself?
Okay, my name is Christopher Nguai Chong. I am the blogger behind Growing Your Tree of Prosperity, as well as a YouTube channel of the same name. I have multiple hats. I'm a Dr. Wealth trainer in the Early Retirement Masterclass. I also teach adjunct in Temasek Polytechnic in corporate law, business law, and some legal modules. I have attempted and failed to run an artificial intelligence course for kids this year. One of my bigger flops. Currently, I'm attempting many projects at once. I'm studying for my ACLP, which is a trainer qualification. And at the same time, I'm trying to get into the artificial intelligence apprenticeship program. So I'm trying a lot of random stuff at once. Okay? Yeah. But folks probably are listening to me because I left the workforce at the age of 39. I retired. As you mentioned, I may be one of the earliest people to embark on the FIRE movement and sort of complete the financial independence component of the FIRE movement. I obviously haven't pressed the button on retire early yet, okay?
No, you're working harder than ever.
Yeah, you're working harder than a lot of people, right? Yeah, but we got to hustle.
Tell me a little bit more. This FIRE thing, it's still catching fire, right? And
that's right.
More and more people are on this, or I mean, even if they are not they don't proclaim to be a FIRE movement person, they are doing a lot of practices that echo the idea of FIRE, right? So tell me, how did these things start and all that stuff?
The earliest appearance of the FIRE movement is from a book called Your Money or Your Life by a lady called Vicki Robbins and her broker. The book is actually not written by someone who practices FIRE the way the millennials interpreted the book.
Oh,
right? Because Vicki Robbins is actually a wealthy inheritor. I think what the broker did was, it was the first time that they came up with this thing called the crossover model, where if I have a portfolio of assets, they generate more dividends than how much you need to spend. As for me, a bachelor, right? When I was a bachelor, then effectively you don't need your earned income anymore, and it opens a can of worms, right? On how you can conduct your lifestyle design, right? You can design it around, for example, maybe working for a less toxic kind of workplace, right?
That's speaking to a lot of people,
right?
bro.
Yeah, design it around like maybe picking up a vocation that you've always loved, but I don't know why the Americans call it a barista FIRE. But I'm not sure in Singapore whether being a barista is what people really want to be. Maybe it should become YouTuber FIRE, right? That might make more sense because you ask kids what they want to be YouTubers, right? For me, when I started on the FIRE movement, it was before I even read the book. I was in the IT industry in the year 2000s. IT professionals face, I would consider, I think, a double or triple whammy. First of all, we had the dot-com bust, which was very bad. Probably most people in your generation don't remember it, but it was a dot-com crash.
Yeah.
And all the pets.com and all these companies wound up. And secondly, the Singapore government embarked on this drive to welcome foreign talent into the IT industry and they produce a lot of professionals who are very cheap and actually very competent, right? You can say a lot of things. I know Singaporeans have said a lot of very bad things about the immigrant IT labor 20 years ago, but the fact of the matter is that they get the job done at a much lower price. And the third thing that's happening is that companies are spinning off their MIS departments, right? And they're selling it to companies like Hewlett-Packard, who then perform the IT services. So historically, 20 years ago, it was a very bad time to be an IT professional. And the sad thing is that a lot of us who studied engineering 20 years ago, we're not too different from the whiz kids in the computer science faculties today. Right? We have straight A's, but when we arrive in the workplace, we don't find that we're particularly competitive against lawyers and doctors. I used to joke with my friend that if you are in the singles bar, right, and there's a lawyer and a doctor with you in the same room, who's going to go for? Right? So for me, the key event was I was in the business of outsourcing because I was afraid that someone would end up getting me retrenched. And so very much like the Squid Game series, I decided not to play the game. I decided to become the guard, the pink guard with the rifle. I would dig other people's graves, right? So if I were to outsource your job, I'm safe from outsourcing. So that was the logic that I had. Until one fine day, I was in Bangalore on an outsourcing project. I received an email. My European colleague, his contract was not renewed. He committed suicide 2 weeks later. And that was when I realized that in the business of outsourcing, it's a matter of life and death. Yeah, so when I watched Squid Game, it resonated with me because when you lose your job, you can become depressive, you can end your life. And then I decided that it's not enough. You know, if I can immunize myself from this problem, the world at large doesn't have a real cure to all this. So I did what every straight-A student would do. I brought my CFA manuals to the data center. I studied the CFA exam for 3 hard years, got a master's degree, and in that process, I became more confused than before because financial theory is subjective. They are not physics. If you apply the discounted cash flow model, 5 people can get a different price. And that's the beauty of finance, but for me, it was something which I could not accept. Until one fine day, I read this paper that said that if you were to invest your money into dividend stocks, the dividend stocks might actually grow faster than companies that don't give out a dividend. Because the people who run dividends companies tend to be more down to earth. Right? They don't take their cash and then they build an empire around it. So that was an eye-opener for me. And that was when I started to realize that if I were to put my money into a blue chip that gave me a dividend, I can receive money, especially in the case of SPH 20 years ago. It could pay me 4 days before my birthday. I get a $150 gift voucher from SPH in the form of a dividend. And I can tell you that $150 changed my life. Because I realized that SPH is just one stock. If we scale this to 20 to 40 stocks, I could be paid throughout the entire year. I guess the first thing that occurred to me is the moment I started getting dividends, I don't have to play the game in the office where you try to get an A grade, right? American firms in those days, because of General Electric, they believe in A-performing employees that will get a very, very high increment. The B-performing employees, which is 80% of the cohort, they will get a normal increment above the rate of inflation by 1 or 2%. And there are C employees who simply get fired. Yeah, you don't have to play the game anymore if you are getting dividends. You just be a solid B player. And the beauty is that if you don't share this with your colleagues, your increment is higher than the A player because they came from dividends. So that was what I figured out at that time. Very early in my career, in my 20s. And so I started playing this game. I would go to the office, economic rice for all my meals. Weekends, stay in the data center, study for my CFA. If there's no CFA, there are multiple financial credentials, FRM, CAIA. I got all of them. Yeah, I'm crazy. I'm crazy. I'm overkill, right? I got all of them.
Studying is not a problem for you.
Yeah, it's not a problem for me. It's in fact
It's
one
a
of
walk in the park.
it's one of my core strengths. But the thing about studying is that I really like one of your episodes where you said don't hide behind your degree. People who are academic tend to hide behind their degrees, right? Yeah, but you need to get yourself out there to create YouTube channels, to use data analytics to get your results, right? Otherwise, you can't monetize. Then what's the point, right? Yeah, so I was able to, because everything is so finely controlled, right? I was able to measure my expenses and my dividends every month. So like any good engineer, we perform optimization. We can reduce the amount that we spend. We can increase the amount of dividends that we have. And of course, there's overtime, right? You need the salary to come in order to buy more dividend stocks, right? So at the age of 32, I was getting that bare, I think, $1,100 that could cover my life as a bachelor.
You started by saying like, okay, so the FIRE movement that most people are practicing today was actually not what the original book was writing about, right? So what is your read of the FIRE movement today? What are people actually practicing today?
I think the millennials, when they picked up the FIRE movement, it was just pure FIRE. And that was many years after I attained FIRE. That's the thing I realized, right? But I think Gen Z ran along with it. And now FIRE has a lot of competition. And these are credible competition. I'm not denigrating it, right? The biggest competition is lying flat. Even SM Lee is concerned about people lying flat. In Singapore, you have so many opportunities. Why are you lying flat? But lying flat, it's a very powerful philosophy that has a lineage lasting thousands of years from Diogenes in ancient Greece. And FIRE has to compete with that. And as you compete with that, FIRE would take on some of the properties of lying flat. And you have lighter forms of FIRE, which I notice people like to bandy around. Lean FIRE, barista FIRE. But the fact of the matter is that it's not FIRE because you're not generating enough dividends to cover your life. You're generating enough dividends to take on a different vocation at a much lower pay. Now, I'm not saying that is wrong, but I'm saying that this is really popular with Gen Z today. And my stand is always that when you have a lot of mental models, right, don't discard them. Don't say that I'm into FIRE, or worse, are very arrogant, wealthy people. I'm into fat FIRE, you're all losers. Right?
I've seen those.
Yeah, you've seen that as well. I don't agree with that. We should put all these mental models into a map, okay? And at its lowest end, I wouldn't say lowest end, but the simplest way to execute is lying flat, followed by barista FIRE and coast FIRE at the same level, then FIRE, and then fat FIRE, and you pick and choose the model that works for you depending on the circumstances that you have today. And obviously for us who are financially independent, I try to be sensitive about the fact that over the many years not being in the workforce, I can be out of touch. I'm out of touch with people who are working today and their daily struggles, right? And so it can come across as very patronizing if I say, oh, very easy one. All you just need to do is buy dividend stocks and it covers your living expenses. But these days, a degree becomes worthless in about 3 to 4 years, right? And then you have to go back and do your professional conversion plan. And then you come back to this new job, maybe in the healthcare sector. Then you are competing against people from maybe the Philippines and their per hour rate is very low. Right. So I try to be sensitive when I talk about FIRE. For the people who are listening in, try to take a small step. Save up a little bit of money, move it to something that pays a dividend. If you can save up $24,000, you're very likely to be able to get $100 every month. $100 every month can just enjoy yourself. Maybe get a Netflix subscription.
I also want to kind of go a little bit further on this underpinning idea of FIRE, right? Which is essentially lifestyle compression, right? For whatever word people use, right? Essentially, you gotta lean down your expenses, you compress your life or your lifestyle, depending on how you define the term. Essentially, just means spend as little as possible, right? And in retrospect, where you are today and then the many people that you've connected, do you think that you are giving up something at that moment in life? Right, just so that we square this, right? Because I totally understand the math, right? You, as low as possible, then you will put as much as in the markets, you get your dividend stocks or whatever investment strategy you have, right? And then you use that to cover eventually that income, the quote-unquote passive income, overtakes your regular expenses. You can leave your job, right? You can, so that's the mechanics. Yeah, so and I think it's very clearly already established. But that front part where you really gotta compress your life, right? It feels like there are certain, downstream repercussions that, maybe an individual at that point in time may not be able to grapple with finesse.
There is no decent answer that people are looking for when it comes to FIRE, because how long can you delay gratification, right? It's like, oh, you should always delay gratification. Yeah, but how long? There are FIRE influencers today. I'm not going to mention their name. I think you can research who they are. Do they live lives that are very inspirational? Some of them might just be playing computer games every day. And I think most of them are single, right? I have a wife and 2 kids. So we're not exactly very good role models. This is a very fair question to ask. Are you giving up something when you're doing FIRE? When you look at the people who go to the FIRE Telegram groups and you ask them for their MBTI, you ask them what personality they belong to, unilaterally you will only get maybe the majority are INTJ, right? 2% of the male population, maybe 1% of the female population. And these are the majority of the people in the FIRE movement, 50%. Okay, a smaller minority would be ISTJ, the accountants, the auditors, very annoying people, right? And then there are people like me, ENTJ. right? ENTJs, the truth is, we are very good at financial independence. We are not good at early retirement, and we know that. If you think about it, the only people who have the gumption and the ability to delay gratification, right? First of all, you need to be convinced logically that this can work. And logically, this can work. Then you must have the bloody mindedness to execute this, right? So I like to joke with my students. I started with 3 meat, 2 vegetables for my cai peng. Then I went down to 2 meat, 1 vegetable. Then 2 vegetable, 1 meat. And then to optimize it further, I switched to vegetarian bee hoon to reduce my cost to attain fire. But millennials can go further. They can do intermittent fasting, right? They don't even need to eat, right? Yeah. But the thing is that we enjoy it because it's like some view it as a spiritual kind of cleansing, right? When you do that. And only a very small population can do that. If, for example, you are a hedonist, ENFP, the FIRE movement is not going to make any sense to you. I won't even sell it to you. I think we need to really understand this. But the good thing is that once the word goes out, FIRE movement will always attract a very small 1 to 2% that will be its true loyal fans. They will say that not only, and the most important telltale sign is that when they reduce their expenses, they get a sick, perverse enjoyment out of it like me.
Has that changed though?
No.
It has not changed.
My family household, we are what they call per capita millionaires. I take public transport, I eat in a hawker center and a kopitiam. Yeah, I told you I came here by MRT, so I'm totally consistent with the life that I had in my 20s. And I'm very public in the Telegram group. I say that, look, not everybody wants a life like mine. And some people will always say that they pay a price. Yeah, like some people can't stand like downgrading to economy. They must fly business class, right? Yeah, I'm not one of them.
Oh, this is very interesting because even Keith, right, investment modes, right? But I saw even Keith in some ways have started spending more.
Yes, he
right?
has.
In his breakdown. Okay, in his mental model, there's this part where it's like basic expense, right? This is like baseline, you know, which I think that's kind of where you're operating at, right? Like the FIRE movement baseline cost of living type of idea. I mean, I saw some of his posts, like it's actually set like a variable expense at the top, right? Where it's not, you don't need it, you know, you don't have, also never mind. But you start to see this variable expense, right? Keep getting bigger and bigger, right? So
okay, I'm going to tell you a little bit about what I understand about Keith. I hope it's not defamatory. Now, he is not a T in the Myers and Briggs type indicator. He's actually an F, I believe.
Okay.
So he's not as logical as he deems himself to be in his writings. I mean it with greatest respect, right?
Investment modes, huh?
Investment modes, right? It is, in fact, I would say not surprising that his expenses have been going up. And the truth is that we do poke him a lot. We think he should spend more. I'm one of those who poke him relentlessly. And then after that, I say, hey, Keith, actually, I spend less than you these days. You know? Recently, I'm telling him that per capita in my household, I can give him a run for his money.
Okay.
Because I have 2 kids, they don't spend a lot.
So your point of view is this FIRE thing is self-select by virtue of your nature in that sense.
Correct. You cannot just wake up one morning and say that, hey, I saw this video with Chris in the Financial Coconuts, I'm joining the FIRE movement. It is going to be a recipe for disaster. And you will hate your life and you will hate me.
You hate
Reggie.
I just want to be clear about this, right? So would you then consider somebody that is not as extreme in that level of prudence, right? Like if we say like the really, really core FIRE type of idea, right, as compared to somebody else that, you know, will compress their expense, maybe down by 50%, right, you know, to then invest in dividend stocks or build their own portfolio. You won't consider these people part of the FIRE movement? I
would consider these people
aspirational.
No. I think it would be, you are aiming for conventional retirement, like many Singaporeans. And the truth is that we are one of the populations in the world that save a significant amount of money because of our CPF. CPF Life gives you a decent amount at full retirement sum, beginning at age 65 anyway. So you can be conventionally retired, right? But I think it's stressful to do it conventionally because I've been thinking about the problem in Singapore, and the fundamental problem in Singapore is you don't let people get down the horse without stigmatizing them. What I mean is that suppose I'm asset rich like my dad, and he lives in a semi-detached house. When he had a stroke, we downgraded to a 5-room flat. We released a lot of capital, which I then moved into dividend stocks for him, right? But when people talk to me, oh, why you downgrade from a semi-D, right? And so because of this, it's created this silent fear among like people in my generation. why is it so shameful to downgrade, right? And because of that, they can't get into this dividends game because the fact of the matter is, if you liquidate landed property and you move into dividend stocks, you might end up with the equivalent value of 2 landed property, right, a few years down the road. But because publicly it is a drop in status, right, we've not really found a vocabulary or a way to deal with that. It's simply just conventional retirement, and people need to be more willing to just press the button and say, yeah, I'm 5-room today, but I'm moving into a 3-room. And wow, the money that I'm going to release it with my CPF life, the dividends, I can travel 4 times a year. Yeah, but I have faith that millennials tend to be more open-minded to this kind of thinking, right?
Hey, welcome to the Financial Coconut Podcast Network. I'm your host, Reggie, aka your Chief Financial Coconut. And if you're loving what we're creating here, like, share, subscribe, share with your loved ones, comment in the comment section below. And yeah, we'll see you for great content on Chills with TFC. I think that whole stereotype of you must hold on to everything is like a growth for at all costs type of situation probably is a good thing for us to revisit, as we go along. I want to hear, I mean, you had like a tagline, right? So, if you today sell your semi-D, you may end up with 2 semi-Ds.
Yeah, in value,
if you invest in
right?
the dividend stocks, right? And I'm sure everybody would want that. They may not want to sell, but they want 2 semi-Ds.
Yeah, they want 2 semi-Ds, right?
So can you kind of walk us through your investment, ideas, and which you've published a lot. I mean, you can read the book, read the website, right? Tree of Prosperity. But I think since we're here, right, so take the opportunity to kind of lay down your thought process of how you invest and all that.
Now, before we get into investing, right, we need to convince ourselves that investing, it's going to be more profitable than basically burning your time and trading it for money, right? That doctrine came from a leftist French economist called Thomas Piketty. And one of his central ideas is R is greater than G, which means that the returns from your investment assets is going to be higher than the growth in your human capital, right? We need to convince ourselves from that, right? Before we convince ourselves that you can be a capitalist, let's get this out. Okay, so once we get it out, then it becomes a no-brainer that if I were to sacrifice a little bit of my happiness, my freedom, to take as much as I can from my salary every month and farm it into dividend stocks, I know that it will pay off in the future. All right. So that's the easy part. And now I will answer your question. Why have I decided on dividend stocks and local dividend stocks? Now, the fact of the matter is, if you do all these back testing on local dividend stocks, for the past 10 years, it's pathetic. These returns, I think for the STI for the past 10 years, we've reached about 10%. But if we don't take the latest 5 years, that means from year 1 to year 5, we're only getting 5%, right? So I did that on my YouTube channel. So we were the butt of jokes for many, many years. I've stubbornly done this since my 20s. And it's gotten so funny that I got to relate to you one thing that happened in Dr. Wealth. So Dr. Wealth, we have multiple trainers. Dr. Wealth staff told me that there was one incident involving 2 trainers that I will not name. And it was those days where dividend stocks were doing very badly. And they were bantering in a video like this. And somehow somebody just mentioned my name in the video and both of them started laughing. And laughing hysterically. I wasn't offended when I heard the story, but I knew that my standing is tied to the performance of these local dividend stocks.
Of course,
right?
Because that's your ideology.
That's my ideology, right? Now, all I can say is that I'm still doing trading in Dr. Wealth. That's all I'm going to say. I'm not going to say anymore. It might be just sheer stubbornness that I've stuck with Singapore, but there are a couple of reasons why it makes sense. Dividends are not taxed in Singapore. So that's the most important thing. If I die, my children get all my dividend stocks. There's no inheritance taxes. And now the third reason, MES is now working very hard to stimulate the financial markets. And they're going to have a playbook that probably is going to be slightly more aggressive than the Koreans and the Japanese. They managed to reflate their markets. So actually, I have a lot of tailwinds backing me up on this.
In this great trend for the next decade.
Great trend. I guess the most important thing is don't gloat. Because I tell people on my blog, I say the geniuses of today have to be the gundus of the past. And there is fundamentally no difference between a genius and a gundu. So please be humble. Accumulate your dividend stocks slowly. Join my community and listen to the Financial Coconut. There'll be gurus that will come and go. And the people that brag about making one particular trade where they made a lot of money those guys are not going to be around for very long, right? But for the people that invest in dividends, if they're healthy, you will see them make many media appearances in the future.
I understand your broad investment ideology, right? Dividend stocks, mostly in Singapore. I think I heard on some of the other stuff, more than 90% are all in Singapore.
More than 90%.
Right? More than 90%, right?
Yeah, I'm probably very minority.
I want to know from that point of view, right? So of course you have a house view with the tailwinds, right? Potential tailwinds that it will come back to, you know, what people will call fair value, and then, you know, the price will come along. You can potentially get another like capital gains alongside, right? As the so-called market reflates itself, right? So that's that. But that one, we'll leave it to see how it plays out.
Okay.
Right?
Yeah.
But I want to know, what are your frameworks around choosing the Singapore dividend stocks?
Okay. The way I look at dividend stocks is divided into 4 quadrants right now. The first being banks, right? Because banks do well when interest rates are rising. So you need to have some banks in your portfolio. And the opposite of a bank to me, ideologically, is a REIT. Because a REIT does badly when interest rates are rising, but does well when interest rates are falling, right? So when you have banks and REITs in the portfolio, you're in essence doing some interest rate immunization, right? When you're pairing them against each other, right? It's like a white wine with fish, right? Yeah. Now, to make everything work, we should also consider business trusts, because business trusts are high dividend instruments, very controversial, could produce capital losses, but they're sort of like cigar butts, you know. There's still a little, maybe cigar butts is not the right analogy these days. There's still some puffs left in them. So I'm always looking for these business trusts. Netlink Trust is one of them.
Can you educate me a little bit more about like a business trust?
Okay, so business trust is different from a REIT. It's based on a different statute. And business trusts, they are not popular because they don't mandate like you have to give out 90% of your rental takings back to the investor. And there's a different set of rules for independent directors, and management can entrench themselves when you have a business trust. So because of this, business trusts are not very popular for Singapore investors. They could be yielding maybe 6 to 8%. And there are some business trusts like Asia Pay TV Trust, got a checkered history. At particular moments in time, they were giving 13%. If you were to buy it at its lowest, yield compression itself could make you, I think, 10 to 20% capital gains just like that. Right now, that's happening right now to Asia Pay TV. But very difficult to get people to buy it because it's Taiwanese cable, right? Which is a sunset industry.
Yeah.
So I like investments like this, where they tend to be a little bit discarded, you know, not so well loved and all that, right?
Just to be clear, a business trust essentially is a trust that owns businesses. Is it? Or
assets. I think the correct term is assets. So these assets tend to generate some amount of cash flow. And you give the money out to the investor. You pick the full amount of cash flow and you return it to the investor. But it could be depreciating, you see. So the amount of sort of resources left might shrink year by year. The closest thing in the US, I think, is called Master Limited Partnership, or MLP. And in America, you basically have an oil well where they pull out the oil, right? As they pull out the oil, the amount of oil goes down slowly, but you get a certain amount of dividends, right? So yeah, but I'm not saying put too much into it. I mean, these are very good instruments that can juice the dividend yields.
It's really very tail end of the business cycle already, right? Very mature type of businesses or assets, and you're just left with that last little barrel there.
Yeah, something like that.
And those are the things that usually ends up in a business trust.
That's right. Some MBA will disagree. What are the rules it takes to spin off a business trust? But an excellent business trust is Netlink Trust, where you operate and maintain fiber optics on the ground. I wouldn't say that is a very highly depreciating kind of asset. Yeah, and that is to me the classic business trust that add value in your portfolio. And finally, one of my favorites, the Singapore Depository Receipt. They're not even Singapore stocks. They're basically like Hong Kong and Thai stocks that are floated in SGX. Because I'm a very traditional investor, I use the CDP. I use their dividends converted to Singapore dollars. It arrives in my bank account even if I'm in a coma. And these are the same stocks that Hong Kongers love to talk about. So Bank of China, Ping An Insurance. I love this Thai counter called PTTEP. It's an oil company. I'm targeting PetroChina right now. So they are wonderful counters that give 5 to 6% dividends. And they produce that kind of internationalization in your Singapore portfolio. So when combined together, right, it's like Captain Planet, you know. Right. It's a very good way of generating some really comfortable amounts of cash flow throughout the year.
That's a bit of a cheat, right? Because SDR,
yes.
It's like, yeah, I got 90% in Singapore, which is objectively true, but the composite within it.
But to be fair, even if you discount my SDR because it's a very new asset class. I still have 90% in
Okay,
Singapore,
okay.
but the SDRs, I would love to grow that pile as we get more.
Can you share a little bit more on that? Because I know the SGX guys are really trying to do more SDRs. There's a whole push, right? And I know the team behind, they're very active launching new things. I think recently they launched a new, another new round of SDRs, right? So why do you like it?
The simple reason, back to first principles, is that it's uncorrelated with Singapore. It does well when the Hong Kong markets are doing well. It does badly when the Hong Kong markets are doing badly. But the Hong Kong markets may not necessarily go up and down with the Singapore markets, right? And secondly, in the Singapore markets, it's very parochial. It's basically real estate investment trusts and banks, right? With SDRs, I have PTTEP and I have PetroChina, which is tied to like all commodity prices, right? So it provides diversification already. There is Ping An Insurance that is a 5 to 6% yielder that is also uncorrelated with the rest of Singapore, right? Yeah. And these are the stocks that I'm interested in. There is a lot of like BYD growth stocks. I don't touch them. Yeah. I don't touch them because of my personality, my nature. Not because they're not good, but normally it's like a type.
Help me understand a little bit, right? So dividend investors always run this possibility that, you know, like the business are super matured already.
That's right.
And then they start to go downhill. It's not uncommon. People know. I don't want to name names, but people know, right? Like we've seen cycles of businesses going down, and you know, eventually they kind of fade out of being a good quality dividend payer, right? In that sense. How do you kind of like spot some of these? Because in my worldview, these things tend to be a bit of a slow burner. Right. So just want to hear your point of view.
For me, if you think about first principles, just let it slow burn. The reason is because the truth is that we are all slow burning and we have a finite lifespan. If it takes a longer time for the thing to go down than your own lifespan, then it's not really a problem, right? But otherwise, if you can invest some time reading financial statements, simply calculate the free cash flow and make sure that it's always above the amount of dividends that's been given out to you. So a little bit of financial accounting would go a long way, right, when you're assessing dividend stocks, right? And there are some dividend counters that are not actually on this slow burn downwards. Take an example of a company like UMS Integration, right? Semiconductor, wafer fabrication equipment. Because it is a cyclical stock, there are moments where you can grab it at 5 to 6% dividends. And there are moments that now it is 3% because it's gone up a lot. Then you got to wait for the next cycle. It could take a decade to do that. So for me, I put a lot of my capital into UMS many, many years ago, longer than a decade ago. So I'm sort of benefiting from this amount of cyclicality, right? So it is not necessarily the case that the dividends tend to belong to companies that's really on the way down, right? Yeah. And of course, for dividends fans in the US, they have their dividends aristocrats. They could be paying dividends and raising it for hundreds of years, over 100 years. So yeah, that's not necessarily the case. Yeah. In fact, I think growth investors, they need to be more worried because the narratives that you have around technology and AI, the narrative could just turn against you, like in a matter of weeks. Yeah, so that's a very, very different kind of risk that they're dealing with as well. Not to say that growth investment is bad. I respect growth investors and I don't denigrate a particular investment style.
Maybe we kind of wrap the conversation back on fire, right? You know, like before we rolled, we were casually chatting, and then there was a little bit of a discussion around like, you know, like what's the use of fire, right? Like is this actually good? You know, or people that are doing fires are wrong, you know, like there's some people that are like kind of saying these type of things, right? So just want to hear like your point of view.
Fire is a philosophy of life, right? If you say that fire is wrong, I'm not going to disagree with you. In many aspects, you might even be right? And the fact of the matter is I'm very aware, as I've said earlier on, fire has to compete with lying flat. Fire has to compete with conventional retirement. The question is, some people, when they practice fire, and it goes back to our definition of what a good life is, right? So I'm just going to share it very quickly. The first is happiness, right? Happiness is at a moment where ping you, are you feeling happy about yourself? It's joy, but it's very volatile throughout the day, right? And what leads to happiness? Actually, more money leads to happiness, higher pay, higher wealth, right? And that's like 60% of what people, Singaporeans, when they look for. Okay? FIRE does help in that because you generate a lot of money and it generates a lot of dividends. Then R is greater than G. You will always have more money over your lifetime compared to someone who don't. So I've solved 60% of the puzzle, right? Now, what I can't solve is the other 40% because 30% is meaning. And a financial institution has worked very hard to try to make claims that FIRE makes life meaningless, which I viciously oppose. And this is incorrect. Because meaning, basically, it's very hard to achieve. You need to know your role in society today. What are you contributing to society? How do all the events in the past connect to you today? It is a very high-level kind of skill that does require some internal reflection. It is philosophical in nature. And the last thing I want is a financial institution to say that your life is not meaningful. It is patronizing. It is mildly offensive, right? Yeah. You can research when that's being said. I leave it to the viewer. That's actually something I'm very angry. I'm actually crusading against. The final 10% is psychological richness. And the problem with psychological richness is, I think you will understand and a lot of people don't. Psychological richness is, for example, if I were to travel based on a package tour, I eat the same food as other Singaporeans and I come back, there's no psychological richness. It's just you're joyful all the way. But if I were to go to a country, I backpack, I live in a hostel, I get to meet different kinds of people, that's psychologically rich, right? Yeah, I don't think FIRE can solve that problem because to appreciate psychological richness, you also need openness to new experiences, which I think you have in spades. And a lot of people don't, right? And so you find these people very conventional. Now, FIRE can sort of help because if you're plucked out from the corporate world, you can then engage in lifestyle design to have more psychological richness, but it's something deliberate that you need to do yourself, right? And so with that, I think that's a very complete argument as to whether FIRE makes life meaningful or meaningless. If somehow you cannot imagine FIRE making your life more meaningful, you cannot imagine FIRE making your life more richer in terms of your emotions, then you don't have openness to new experience. It's not the fault of FIRE. It's your own psychological makeup, right? Which brings us back to the circle. Why only 2 to 3% of the population actually enjoy FIRE, right? And 97% probably see it as some kind of a very painful sacrifice.
You've thought through this, man.
Yeah, for many years.
You've really thought through this.
For many years.
You carved a circle around that ideology, and whether people agree or not, I think it's respectable to have a strong, rigorous argument.
Yeah, and we should.
Awesome. Thank you.
Thank you.
Thank you for your time. For our listeners, if they would like to connect with you, where's the best place to go?
Growing Your Tree of Prosperity now has 2 branches. We have a blog and we have a YouTube channel.
Okay,
right?
so you prefer a YouTube channel or a blog or
the blog would be more thoughtful, would be more philosophical.
It's been longer sitting around. Yeah,
but the video would be 10 minutes long. It will be bite-sized chunks, but it'll be very relevant. It'll hit you very hard for a very short while.
Thank you.
Thank you.
I hope you enjoyed today's episode and definitely check out the Tree of Prosperity. We'll put the link lah. We'll tag below and then easy for you to look for it. And if you have not put your email address at thefinancialcoconut.com, please put it there so that we can get in touch with you and we can route out the algorithm. It's not always fight the algorithm, very tiring, right? So help us stay connected with you so that you're aware of the latest happenings at TFC. You can get to see some of our latest events and all that good stuff, and maybe we'll organize a summit, right? I'm thinking of something there, right? So, but not this year, maybe next year. But you wanna get a first dibs on it, you must, go over to the email to our website and then put your email there. With that, thank you for today. We'll see you in next episode of Choose with TFC. Bye bye.